Okay, and welcome back, students who are taking financial accounting. And in this series of videos, we were working on the assigned homework problems for Chapter 7, the short exercises. Let me get to the next slide here. Okay, so note, accounting is about understanding the concepts and then applying that understanding to the situation at hand. If you get the application aspect wrong, that is one thing, and is easily remedied by watching someone else work the problem. However, if you don't understand the concepts, that is a whole other thing. Watching a problem worked out will not help if you do not understand the underlying concepts. Go back and study the text material again and watch the theory videos. If you still don't understand the concepts, then either email or telephone an instructor. Get help with that understanding. All right, so let's see here. We worked on 7.4, so now we're working on 7-5. All right, balance sheet presentation of cash. Prepare the current assets section of the balance sheet as of May 31st for Spices and More Inc. using the following information. All right, accounts receivable, petty cash, cash in the bank accounts, and inventory. All right, so we're balance sheet presentation. All right, so I'm not going to put in the heading here. So you start out with your assets. Actually, and again, formatting. I'm taking shortcuts here. All right, you want to see, look at the solution to find, what formatting should look like. But generally, this is the information that needs to be presented. All right. So if we're looking at the current asset section, so what you will do is you'll actually break out your current assets. And then your long-term assets, and I'm just going to give you this for additional information. You'll do the current asset section, and the long-term section will be called property, plant, and equipment. It won't be called long-term assets. Okay, it's understood that this property, plant, and equipment is all long-term stuff. And then after the property, plant, and equipment, you'll have things like land, which is really long-term. Okay, notice that's like the last account, because generally, you'll have a mortgage for 30 years, or that'll be your land or whatever have you. All right, so just thought I'd throw that in. But even though you're calling this current assets, remember, you're not going to have a long-term assets. Generally, it will be called property, plant, and equipment. Right. So what are we going to have under our current assets? Well, we're going to have a cash account. All right, I'm going to deviate from the solution, all right, because generally you will have a petty cash account on your general ledger account, right? And I disagree with the solution. I mean, is it possible to, like the solution has, they just call it cash, and they're including this 300 for the petty cash and the cash in the bank account together, and they're saying, okay, it's 21,700, right? Because they're combining those two together, right? Is that wrong? No, but for a lot of, when you realize that for a lot of small businesses, it's just more efficient, more effective, just to, just to show your general ledger accounts and the balances in the accounts. And if I have a cash account and I have a petty cash account, I am going to want to have, I'm going to want to show the 21,400 for my cash and the $300 in my petty cash, right? But realize that as businesses get bigger, and they, we're talking about large businesses, there's more of a consolidation of information into accounts. And if you look at annual reports for large companies like Microsoft or whatever have you, they don't look anything like what you're seeing in the in the textbook. It seems to be more like a summary of things, But you'll also notice that there's an awful lot of notes that are included in the annual report to explain those summarizations. Because remember, in a higher level of accounting, and I realize that people in business management don't need this information, but your financial accountants, I mean, for your accountants, you'll notice this. When you get to these large businesses, you're talking about, consolidating your financial statements, because entities have, it just popped into my head, like Pepsi-Cola, Pepsi has Taco Bell, PepsiCo, right, is the parent company, has Pepsi-Cola, it has Taco Bell, it has Kentucky Fried Chicken, I'm sorry, Pizza Hut, not Kentucky Fried Chicken, it has Pizza Hut. And so they consolidate those different entities, and therefore everything looks more like a summarization, and you get an awful lot of notes. So you'll see, these summarizations. But for a lot of the small businesses, and even the some mid-sized businesses, you're generally just going to record you're going to create your balance sheets using whatever general ledger accounts you have. So I'm deviating from that solution based upon that understanding. Okay, and then next would be my accounts receivable, and that's 54,200. And then lastly, I would have my inventory of 85,800, and I would call that a total current assets. Now, notice I put a $ in this column here, all right? Remember, we're creating, our balance sheet presentation, so I want to follow, things correctly. So I have to put a $ because it's the first number in that column. Now, the textbook is showing that they're putting the balance right here, okay? And I disagree with that. I mean, unless you're doing it single step, but most of the single step, meaning everything is presented single step, means all of your numbers are presented in one column. But you generally, for the most part, accountants don't like using single step because it's too hard to be figuring stuff out. So they use the multi-step, right? Which means you do math in one column and you put the balance in the right-hand column, right? So reality is we would end up putting the balance over here, 161,700, okay? And we'd put a $ there, because it's the first number in that particular column. And then we'd have additional information here, right? So, that would be our property, plant, equipment, and so on and so forth as we move down. But we're only being asked to create the current assets section of the balance sheet. So this is how I would actually create that section. Now, if you look at the solution, like I said, you'll see, cash is, 21.7, and they'll have accounts receivable, and then they'll have the inventory, right? And then they put the total current assets here of 161.7. And notice that they draw one underline underneath it, okay? Not a double underline, all right? Remember, a double underline means that's the end of a calculation. That's a final number. A single underline represents part of, a calculation. Now, why they would put an underline there, I don't know, because you're not adding 161,700 to itself. You're going to have an additional number here for your property, plant, and equipment down here, okay, which you would have an underline. So see, it doesn't, that underline right there doesn't make sense. Okay, so you wouldn't want to put an underline there because you're going to end up doing the math between these two numbers to get a total asset right there. Okay, so I don't particularly agree with the way that, what's this, PowerPoint stopped. Sorry about that. Oh, and that just did everything real weird. All right, so sorry about that. But I don't need to go over that anymore. I don't have to rework or refinish this video. I'm just going to, cut the video off, and you saw that information. Go back, rewind, get to that part, this is a technical thing here as to why that happened. But anyway, I'm done with that problem, and as you saw, I don't agree with that solution in the solution manual, the way it's presented. So go ahead and go back and watch the video again if you don't understand something, and if you still have any questions, feel free to contact an instructor. Sorry about the technical difficulty there.